Turkey's banking sector's net profit climbed 12% annually in the January to November period, according to the country's banking watchdog on December 31. The figure amounted to 50.7 billion liras $9.8 billion in the first 11 months of 2018, up from 45.2 billion liras in the same period last year, the Banking Regulation and Supervision Agency (BDDK) data revealed. The sector's total assets increased 17.5% year-on-year and reached over 3.8 trillion liras $743.7 billion as of November 30. Loans, the biggest subcategory of assets, totaled 2.4 trillion liras $461.8 billion from January to November, rising 13% from the same period last year. On the liabilities side, deposits at the country's lenders climbed 16.5% over the same period, reaching 2 trillion Turkish liras. The US dollar-Turkish lira exchange rate was around 5.21 as of November 30 this year, while one US dollar traded for some 3.92 at the end of the same month last year. Turkish banking sector's regulatory capital-to-risk weighted assets ratio, an indicator for calculating lenders' minimum capital requirements, was 18.21% in November. The ratio of non-performing loans (NPL) to total cash loans, a measure for the healthiness of given loans, deteriorated annually to reach 3.7% last month, up from 2.93% in November 2017. As of November end, 50 state, private, foreign lenders, including deposit banks, participation banks, and development and investment banks, operate banking activities in Turkey with nearly 11,600 branches, domestic and overseas, and 207,470 employees. Last year, the Turkish banking sector's net profit hit an all-time high, reaching around 49 billion Turkish liras, a yearly increase of 30.8%.